Arash, tell us what you know and tell us, is your report, do you think, is there a connection between a Saudi investment in Tesla and his desire to go private?
Okay, let me start there and give you some background on our story, because that's fundamentally what prompted all of this. I've been working on this story for several weeks, trying to piece together what exactly had happened based on a few things I'd been hearing in the market. And what we learned was that if you remember when Crown Prince Mohammed bin Salman came to the US in March, he did a tour of the country, went around, he met a lot of people, he went to the East Coast, he went to the West Coast. Around that time, or soon thereafter, the Saudi Sovereign Wealth Fund, which is his vehicle to drive economic change in the country and diversify its country off its oil wealth, they expressed an interest in buying primary shares, newly issued shares from Tesla at that time. For whatever reason, Elon Musk did not act on their interest. And so they decided, with the help of JP Morgan Chase as their banker, to buy shares in the market, and they quietly built up to close to 5% in Tesla stocks, which I haven't done the recent calculations because of today's move, but that would be somewhere in the range of $2 to $3 billion worth of Tesla shares. That is all we know for now. There had been interest in buying primary shares, but as far as what we know now, there's not been any further discussions about funding any kind of takeover or anything of that matter. We gave Mr. Musk a few hours to respond to our story this morning. We did not hear from him. And then about 30 minutes after we published, he went on this tweet storm, which we're all following now.
So, Arash, do you feel like this tweet storm was in response to the news that you broke, that the Saudis were building their own position, or whether this kind of move is in concert with each other?
Well, I can definitely tell you that Tesla and Mr. Musk were well aware that we were planning to publish this story. So whether the timing was coincidental or not, I don't have direct evidence of that, but they had several hours notice that we were publishing the story, and therefore his actions followed, I would imagine, the notification that we were preparing to go, and we asked for comment, and Tesla declined to comment.
It appears he's tweeted again, definitely no forced sales, hope all shareholders remain, will be way smoother and less disruptive as a private company. So that goes to what we were talking about with Mike Santoli, is that he'd much prefer to be a private company rather than dealing with the public shareholders. You have no idea why it is that, did they even have any discussion, Musk and the Saudis, or did he just ignore them? Any details?
No, he's been in touch. My sources tell me that Musk is in touch with the Saudis. He has been messaging. He is aware of their shareholding. He is fully aware. And another person I spoke to today, who's also in the know, told me that ever since the Saudis, if you remember, they bought a $3.5 billion worth stake in Uber a couple years ago. And ever since then, that caught Mr. Musk's attention. And they have been in touch since then, according to one of my sources. So this is a long-running discussion. If you're following the Saudis' investment model, they put $45 billion in the investment fund with SoftBank. They've promised $20 billion, up to $20 billion in the infrastructure fund.
I was just going to ask you about SoftBank. The minute this news came out that he started talking about the funding secured, first thing I thought of was Massoudi and SoftBank, because they've got those billions and billions available right now within that Vision fund.
I do cover SoftBank. I do not believe this is something they're looking at. I know that they've done this tie-up with GM, which you guys would have seen earlier this year. They've done a couple things in ride-hailing, but I do not believe they are looking at Tesla based on my reporting.
James, what's your take on all of this, and particularly that price level at 420?
Yeah, well, first of all, thanks for having me. Good afternoon and happy birthday.
Thank you very much.
I want to be very careful here. I mean, the only thing we can say for sure is there's a lot of busy lawyers, I'm sure, at Tesla right now, maybe even at the SEC. So you want to be very careful here about reading too much into it. That said, we cover the automotive industry. You almost can't pay somebody to talk about the F-150 or the Silverado right now. Everybody is focused on next generation of autos and mobility. And, if you go back and you get past the apologies on the conference call for the second quarter, Elon was very clear to put his AI team, if you will, or software team, and some new hires around that up in the forefront of the conversation. He had them on the call with him. So, I'm not surprised to hear that there's this profound interest among, I would imagine, an international community of futurists to take part in, in part an EV revolution, but really a mobility revolution of which Tesla is extraordinarily competitive. So there absolutely is something to this, I think, and this sort of the argument that going private might make more sense than remaining sort of a very volatile conversation in the public markets.
And James, clearly you were constructive on the stock. Your price target before today was 385. What do you think is the motivation here? Is it purely and simply to escape things like earnings calls? If it is, as we're sort of learning, that the structure wouldn't involve Mr. Musk buying more shares himself?
Again, we're trying to solve the puzzle here with very little detail, so I don't want to go too far in terms of the structure of whatever would be contemplated or not contemplated based on what we've seen today. Well, look, what I would say, is at the end of the day, it's very difficult and it takes a lot of time and many billions of dollars to serve, the mass market, even among luxury brands, in the $35,000 to $50,000 price point. To do that globally requires more time and a lot more money, obviously. So I just don't know that the markets, even when companies like this show progress, we haven't seen, if you will, bears capitulating. On the negative side, when there are negative tweets that come out, you very rarely hear bulls capitulating. So if everyone's kind of stuck in the mud on the conversation, then what's the benefit almost of being public anymore? And there's just a long-tailed nature of this. And the discussion we have, even with those that agree with us, it's so long-term in nature when we talk about valuation and our outlook. It almost, again, speaks to why being public.
Yeah, Arash, that's a big question that we ask a lot here as we see the number of public companies in the world shrink and shrink and shrink. It's just very, very difficult. You get any other ideas out there? When he talks about going private, it's going to take a lot of billions to do it. And yes, the market gives him a lot of credit already with this massive multiple, but got any theories about where this money would come from or what's going on here?
Well, my colleagues and I have spoken to bankers very close to Tesla. No one was aware of any of this based on our sourcing so far. So this has come as a shock to some of the people who you would imagine would be in the know. I think I saw CNBC's Alex Sherman tweeting something very similar in the last hour as well. So no one in our network of financiers and people who provide the sort of loans and funding for this were aware of this as far as we can tell. And that makes a huge difference. I think the other thing we must not lose sight of is Tesla is one of the most heavily shorted stocks on the S&P 500. I believe 27% of its free float is on loan to people who are betting against share price decline. So if this is a half-baked plan, if it's not real, if it's a joke, there would be serious consequences based on our reading of securities law. And so that's something you can't lose sight of. This is a company that is a battleground between bulls and bears, and at the fundamental at the epicenter of this is this wild entrepreneur who's achieved a lot of things and pulled off things no one believed in, but there's still questions over whether it's real and if it's all just a bubble or if it's real. So
it highlights what would be one of his motivations, right? I mean, it would be one of his motivations is to squeeze the shorts.
We can't discount that from the realm of possibility.
James, with all that in mind, James, and the uncertainty around whether this does indeed happen or not, your price target before today was 385. You've had a huge bump up to that for free, as it were. Would you advise clients to take some profit, given that we're halfway there?
Well, look, I want to be clear as well about what Consumer Edge is. We're not a trading house. We don't have any banking business. We are, strictly speaking, research only. Our $385 target price is predicated on a future paradigm of, call it 350,000 units a year of production, which is short of the company's own stated goals for 2020 for approaching 1 million units per year. So we do think, to the extent that they outperform our expectations on the production side, on the profitability side, on the cash flow side, there is certainly room to run here. And when you do talk to bulls, I think there may have been some on in various shows earlier on your channel today talking about $500+ price targets. It's just about your time horizon. Quarter to quarter, though, it's extraordinarily tricky, again, which is why this is such a compelling question to ask, again, public versus private. But we think as long as they remain on track, there is a lot of runway to scale globally in the mass market luxury brands.